Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Okay, folks, let's start with the price of Bitcoin. Right now, we're trading at $75,670. So Bitcoin had a bit of a pullback because of the news we got regards to the Iran situation escalating again. And this is something I literally mentioned in the last podcast that even though we saw the price rally, we are still in uncertain times as it relates to the Iran war. And we could see that situation escalate and things could change and that could impact markets. However, Bitcoin is still holding up pretty strong. The MACD on the daily still shows bulls are in control. It has not flipped bearish as yet, and the RSI is not in the overbought zone. So there's still room to run here. Not to mention, we have that CME gap around $83,000. So Bitcoin could technically run up to those prices and before pulling back. Now, one of the things I've been mentioning to you guys is how low could we potentially go? Could we go down to 50K on that pullback? It's possible. I'm not saying I want it to happen. I'm not saying it's guaranteed to happen. Maybe it doesn't go there. Maybe it just retests the 60K level and then it bounces again. Or Bitcoin continues to go higher. And this is where we're at that crossroads place where there's a bull scenario and a bear scenario. As educated investors, we want to look at all scenarios. We don't want to be emotional and we don't want to have confirmation bias. We simply want to look at which scenario has the higher potential of playing out. I'm still holding to the thesis that Bitcoin could go to 82, maybe a little bit higher, maybe it overshoots to 90, pulls back, and then we see a major correction, or it keeps going higher. Some people are saying it could go to over $100,000. So we'll see. Obviously, I want the price to go as high as possible because I'm here to make money, right? And altcoins will follow Bitcoin's move, but we need to have that strong breakout to the upside. And we've been seeing this slow, steady rise. The one good thing is the stock market is showing a lot of strength. The S&P 500 obviously had a massive V-shaped recovery, and it is in the overbought zone on the daily chart, but it could hang out there. We've seen the stock market hang out in that region, even if it has some short-term pullback. So let's see how things continue for the stock market. Let's see what Bitcoin does this week. Speaking of the weekly chart, that is completely flipped bullish. So that's a very good sign, guys. Very, very good sign. The problem is the weekly is the higher time frame than the daily, and a lot can happen on the daily, with the Iran news and all these things as mentioned. So we're gonna have to be patient. But I'm turning very bullish, guys, overall. Even if Bitcoin rolls over and tests 50K or 52, whatever it is, right? Because I know the majority of the downside is over, right? We've gone from 126 down to 58K. That is a huge dump. And even though it may go to 50K, that's not major. And then it bounces and keeps going higher. And again, I'm not saying that's guaranteed or I want that to happen. I'm just saying it's a scenario we can't rule out. You're going to see people get very upset by that. They're going to get triggered, right? But I'm giving you all scenarios. So many people are going to say, well, I believe it's going to happen this way and nothing else is going to happen. Well, you don't know that. If you know the future, please tell me what's next week's winning lottery numbers, right? This way I can go play the lottery and win some money that way. So let's see, guys. Let's see what the week brings us. So we're going to have to be patient here. We are seeing a lot of buying. Michael Saylor's strategy has bought more Bitcoin. They bought 34,164 Bitcoin for approximately $2.54 billion at an approximate price of $74,395. So they continue to accumulate. Not only Strategy, but Bitmine, headed up by Tom Lee, they bought another 101,627 ETH in the largest purchase since December 2025. So huge accumulation happening here. And crypto ETFs, the investment products are seeing a lot of inflows. So crypto fund inflows hit $1.4 billion in the second strongest week since January. So things are starting to turn bullish, But as always, we're going to have to be prepared for the roller coaster ride, especially with the macro factors like inflation, oil prices, the war in Iran, and much more. These things can weigh heavily on markets and cause a lot of volatility. So we're going to have to continue to monitor the situation, plus the charts, of course, and the on-chain data. But I do like what I'm seeing on Bitcoin's weekly chart. It's looking pretty bullish here. Okay, folks, now we have some major updates on the Clarity Act, and it's not good. So, Senator Tillis, a Republican out of North Carolina, told the Senate Banking Committee Chair Tim Scott, a Republican out of South Carolina, the panel should not plan to advance a major bill in April. Negotiators need more time to finalize a bank crypto compromise on stablecoin yield, Tillis said, pointing to a potential May markup. So more delays, but the reason being is the banks are lobbying hard. They are fighting. You can imagine they want to obviously kill as much of the stablecoin yield as possible, and we are running out of time. The banks would love for the Clarity Act not to pass. And remember, the stablecoin yield situation, the Genius Act is law. So even if they block the Clarity Act, the law is still the law here. So I don't know what these banks are trying to do. Obviously, they're trying to relitigate this bill that was already passed. I don't know why they didn't try to figure it out before the bill was passed, but nevertheless, this is a situation. So it's ongoing. And many of you saw my recent interview with Patrick Witt of the White House crypto advisor. And he said the latest date that we can get to is before the August recess. So essentially near the end of July, they have to get this done. It's getting the markup in the Senate and then passing it in the Senate and then going to the House and then President Trump. So it's crazy, guys, but the banks are fighting. And if it's not looking good right now, but hopefully they can pull out something here. Now, Alexander Grieve, who works at Paradigm, he says the American Bankers Association is running another anti-stablecoin ad in Politico this morning. At this point, it seems pretty clear that the banks actually don't care all that much about any purported issues with the Genius Act. They just want to kill clarity. And if they run out the clock, they will. So these banks are playing dirty here, guys. They're playing dirty. They are lobbying hard. It's going to be a tough one. Again, hopefully they can find some sort of compromise. But if this is indeed what Alexander is saying here is the crux of what they're trying to do, they don't necessarily care about the stablecoin yield. Again, and this theory has some legs because, as mentioned, the banks didn't do anything before the Genius Act was passed. All of a sudden, they're like, we don't like stablecoin yield, but you knew it was in the bill the whole time in the Genius Act, and now you're trying to fight it. So it could be they're trying to block clarity. And you may say, well, why are they doing that? Well, if they can do that and let the midterm elections happen and the bill gets stalled out and they keep stalling and stalling, and then someone else comes in at the end of President Trump's term and they're like, you know what? The banks are lobbying me. They're giving me money for my campaign donations. I'm going to go in there and putting my new SEC chair, my new CFTC chair, and or whatever, or put influence there to roll back a lot of these things, because the banks. It's not that they're trying to kill crypto. They're clearly building with the technology. They want to control it. So they would want the legislation to be crafted in their favor versus decentralization. They want it centralized. That's the point here. Blockchain, stablecoins, all that, it is the future. The banks are building their own private permissioned version. JP Morgan was doing this since 2018, right? Building the private version of Ethereum, and doing much more. So they definitely care about it. And they definitely want to build with it. They just want to control it. They hate the fact that they have to go to public chains that are decentralized. They hate that, right? Jamie Dimon doesn't like that. So that's what's happening here. And we're going to have to keep fighting. And boy, I don't like this, but I'm still holding out some optimism here that they can get this done. So we shall see. Now, speaking of TradFi, Charles Schwab Citadel Securities way entering prediction markets. So again, these firms are launching crypto services, crypto trading, custody, tokenizing. Now they want to look at prediction markets. They're going all in, guys. And we're seeing the race. Charles Schwab just launched crypto trading. So they're going to launch Bitcoin and Ethereum trading. And Citadel Securities is doing a lot. And they're doing tokenization and much more. So Very interesting stuff here. And here's an example. Nomura study says 65% of institutional investors see crypto as a vital portfolio diversifier. A new survey from Nomura and Laser Digital shows improving sentiment among institutional investors as regulatory clarity and new products drive deeper engagement with digital assets. So this should come as no surprise, folks. You got the biggest of the biggest launching crypto trading and financial products, ETFs, tokenization, stablecoins, and much more. So they're all in this race. And it's not just here in the United States, it's happening globally. We're going to talk about some global firms. But first, quick word from our sponsor.
This episode is brought to you by BitGo, the trusted infrastructure behind the digital asset economy. If you're serious about crypto, whether you're an investor, institution, or building in this space, you already know security, compliance, and execution are everything. And that's exactly what BitGo delivers. With over a decade of experience and 5,500 plus institutional clients across 100 plus countries, BitGo provides a full suite of services, including qualified custody, trading, staking, financing, and stablecoin infrastructure, all in one platform. Let's break it down. Want to launch crypto services fast? BitGo's crypto as a service lets banks, fintechs, and platforms go live in as little as a couple of months without dealing with complex licensing or infrastructure. If you're looking to launch a stablecoin, BitGo offers a complete stablecoin as a service platform from reserves and smart contracts to compliance, built to align with the new US regulatory framework that is the Genius Act. Want to earn rewards on your crypto? BitGo runs one of the largest institutional staking platforms with tens of billions staked across 50 plus networks, all while your assets stay securely in qualified custody. Need deep liquidity and execution? Their trading platform aggregates liquidity across 30 plus venues, giving you better pricing and the ability to trade directly from custody. No pre-funding required for approved clients. And if you need capital, BitGo offers crypto-backed financing, so you can unlock liquidity without selling your assets. So here's the bottom line. BitGo is one of the first federally chartered digital asset infrastructure companies offering regulated, insured custody and a platform built for institutions, but accessible to forward-thinking players across the space. So whether you're scaling a fintech, managing a fund, or building the future of finance, BitGo gives you all the tools that you need to do this securely, compliantly, and at scale. So learn more at bitgo.com and see why the biggest players in crypto trust BitGo.
All right, folks, moving ahead. Singapore-based Cobo launches agentic wallet with guardrails for AI-led on-chain execution. So many of you know that AI agents are going to be a big part of the economy. Many of you will have AI agents doing things for you. It's still very early, but we all know AI agents are not going to use cash. They're going to use stable coins and run on blockchain tech and much more. So Cobo has launched Cobo Agentic Wallet, which enables AI agents to perform on-chain tasks. The new wallet supports over 80 blockchains, including Ethereum, Base, and Arbitrum. So key example of how there won't be one blockchain to rule them all. There's going to be many in different industries, different verticals, and much more. And you want to look at which ones are getting the most adoption and obviously take your bets. But this is the future. And even humanoid robots will have crypto wallets built in them. They're going to have blockchain technology to protect their constitution and their rules, right? I interviewed a robot software maker, I think it was last year, and they have the constitution on an Ethereum smart contract, and that's downloaded every day. And there's crypto wallets, actually multiple crypto wallets built into the humanoid robot. So it's pretty incredible what's being built. And the future is going to be pretty wild, but it makes sense that robots, AI agents, and much more are not going to be using traditional payment rails. It's going to be powered by crypto tokens, stable coins, and more. Okay, moving ahead, Coinbase and Bybit are reportedly working together on tokenization, custody, and global distribution of US stocks. So Coinbase is already doing a bit of this, and Bybit is more international, so it makes sense Coinbase looks to be partnering with them to get distribution of their tokenized assets. And Binance is actually a competitor to both these firms. So I think this is a strategic move here by Coinbase to help get as much market share because Binance is huge, huge, huge internationally. They are the world's largest crypto exchange. Now, Coinbase is a powerhouse here in the United States and some other markets as well. But this would position them very well because Bybit, I think they have some pretty high trading volumes as well. So they're pretty close to Binance in certain assets. So this is a smart move on both their parts. And here's another example for Bybit. Bybit leads funding for Malaysia's Hatta dual license crypto platform. So they're making investments here, it looks like. So Bybit has led an $8 million Series A funding round in Hatta, a dual license digital asset exchange operating in Malaysia. The round also included participation from global family offices and follows Bybit's earlier investment in Hatta's $4.2 million seed round. So across the globe, we are seeing building investments, mergers, acquisitions, companies going public, and it's pretty exciting. These on-ramps being built globally for institutional investors and retail, but really the building is happening for institutions to bring in a lot of capital. So this is why, again, have that macro view to long-term view. A lot more capital is going to come into this market. Now, Circle unveils USDC bridge for native cross-chain stablecoin transfers. So Circle, obviously second largest stablecoin issuer looking to compete and take market share from Tether, they continue to build some really cool things. So stablecoin issuer Circle has launched USDC Bridge, a new user interface built on top of the cross-chain transfer protocol that seeks to simplify native cross-chain transfers of the USDC stablecoin. On Friday, Circle's USDC X account said the bridge allows users to move USDC stablecoin in a predictable, transparent way, citing a native burn and mint transfer mechanism and no bridge complexities. Gas fees will be handled automatically. Fees will be shown upfront, and live status updates will be provided throughout the transfer, Circle added. So the building continues, folks, and a lot of building does happen in the bear market. Because price is not really a distraction at that point. And I think a lot of these folks are getting ready for the next bull market, right? They're trying to get as much market share, build out and launch their different innovations to production and get it live for when the next herd of retail and adopters come in. Look at this. Japan to test government bonds as digital collateral on the Canton network. Guys, remember I've been telling you about Canton Network, right? Watch this closely. I have the token in my portfolio. I'm bullish on it, and I will continue to buy the dips on it. Obviously, not financial advice. Do your own research, but this is pretty big. You got a government building on it. So Japan Securities Clearing Corporation, part of Japan's exchange group, said Monday it will launch a proof of concept with Mizuho Financial Group, Nomura Holdings, and Digital Asset to test the use of Japanese government bonds as digital collateral on the Canton network. The project will examine whether Japanese government bonds can be transferred and managed on-chain while maintaining the legal status of bonds under the Book Entry Transfer Act and the Financial Instruments and Exchange Act. The trial will also test whether integrating existing systems with Canton's blockchain infrastructure can support more sophisticated real-time collateral transactions on a 24/7 basis, including in cross-border use cases. So that last sentence there is where the puck is heading. Real-time transactions operating 24/7 and cross-border, truly global markets for the first time in history. I know some of you are going to say, well, you could get gold and this thing. Yeah, but it's not real time and it's not real time verifiable, right? And it's not like atomic settlement that's happening. And blockchains and all these things are enabling atomic settlement. So that's the big difference. And you have that instant settlement as well. So there's no T+1 or T+4 or 5, whatever. It is immediately happening in seconds. So huge news here for the Canton network. And like I said, I hold in my portfolio, very bullish on it, and great to see this type of adoption. Now, Tether backs UAE tokenization firm KAIO, if I'm saying that right, KAIO, in $8 million funding round to bring Emirati funds on chain. So Tether, one of the most profitable companies on the planet. They continue to innovate and build and also invest. And it's a smart move on their part. They have the capital, they have the extra cash. Why not, right? and they know a thing or two about tokenization, clearly. So, Abu Dhabi headquartered tokenization firm KAIO raised $8 million in a strategic round led by Tether and other crypto and institutional investors, bringing its total funding to $19 million. KAIO builds infrastructure that lets asset managers tokenize and distribute institutional funds on blockchains, packaging products from firms such as BlackRock, Brevan Howard, and Hamilton Lane with minimum investments starting at $100. The company plans to expand into credit, structured products, and ETFs, launch an on-chain fund with Mubadala Capital, and channel USDT stablecoin liquidity into regulated investment products. Now, folks, look at the different countries we covered in this news, right? Japan, Malaysia, Singapore. Pretty incredible what's happening, being built. Abu Dhabi, clearly, being built around the world here. I'm so excited, to see what's being built across the globe, and it's fascinating as well. It's truly game theory. No one wants to get left behind, and they're all in the race now. So really, really great stuff. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Please be sure to support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. And be sure to grab a copy of my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. It is packed with tons of value. It features expert commentary. So all those great people I've interviewed, I ask them questions off the record and put those clips in the course. They haven't been published publicly on the channel. So you're going to get that exclusive content. I mean, just imagine, guys, you will hear Carlos Domingo, co-founder of Securitize, explain tokenization to you, right? And Securitize works with BlackRock and many other firms, and they're going to go public pretty soon. So you're going to get content like that from very smart people who are building and know a lot about crypto and blockchain tech. So knowledge is power. Expand your knowledge about this technology. And we have a huge bear market sale going on. Get 50% off the price of the course. Use the code BEAR at checkout, BEAR. So go to My Crypto Course to learn more. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.